The number one key to building long-term sustainable wealth is understanding all three phases of money: the accumulation phase, the distribution phase, and ultimately the preservation phase. If you're not familiar with the three phases of money, don't feel bad. You're like most people. And after this video, you'll be clear on what the three phases of money are, how you can take advantage of each one, and ultimately set up you and your family for long-term financial success. The accumulation phase of money is the first phase of money all of us go through because we all start at zero, or maybe if we got lucky, we get a little bit. When you're in the accumulation phase, this is usually when you're in the younger years of your life and you can take risks because you have time to make up the difference, you have energy, you have your health. It's like, go for it. You have a dream, try it. If you try it for 5 years and it doesn't work, you wake up and now you're 23, 25 years old. You're still young. Try something else for 5 years. 28 years old, you're still young. Worst case scenario, you tried something for 5 years, failed. Tried something else for 5 years, it failed. After 10 years, you're still failed, you're 28 years old, now you have a fresh slate ready to take on anything you want with this 10 years of experience. It's gonna be okay. Now that we got the worst case scenario out of the way, let's talk about the best case scenario, or how we can do things the right way to dramatically increase our chances for success. The accumulation phase is all about trying to get as much money as I can to build this big pile of wealth. The first step that you need to take is increasing your income or your earning capacity. Usually this looks like investing in education, investing in mentorship, things like that, because those are what's going to help you increase your earning capacity. But more importantly, increase the amount of options you have to invest your money. Once you get your income to a point where you got money coming in, we're talking at least $30,000 to $50,000 a month minimum coming in every month. Now we can start, okay, let's make our money work for us in other areas. The primary focus of these is going to be accumulating wealth, which is going to be through real estate, through insurance, through the stock market. Each of those vehicles are different. For example, if you're going to start building wealth in the stock market and you don't really understand the stock market, Warren Buffett says it all the time. All the people who actually know what they're talking about say it all the time. Just invest it in the S&P 500. Put money in every month, dollar cost average, and over time, because now you're putting a lot more money in, it's going to grow a lot more than if you were just putting a small nugget in without increasing your income. When it comes to trying to build wealth in real estate, as long as you're young and like willing to do whatever it takes, the most efficient way is going to be to buy multifamily homes, but living in one of the units, so you don't have to put a huge chunk of money to buy this multifamily. You can put a lot smaller amount because you're going to be living in it, or you're going to be getting a FHA loan. And without going too in depth as to what all those things mean, there'll be another video for that. But understand that when you're in the accumulation phase, we're going to get into a property, live in one unit, rent out the other, so we're living for either rent-free or as close to it as we possibly can. Then after 1 year, we're going to move into another property and do the same thing. After 4 or 5 years, you're going to have built up a nice portfolio of cash flow and passive income that gives you a level of security to continue to pursue other investment opportunities. There are other ways other than just the stock market and real estate. I just use those examples so you can understand the idea of what I'm talking about. Because during this process, the biggest growth that's going to happen is going to be within your business and with other business opportunities that you're going to be able to take advantage of over this phase of life. Then we get to the distribution phase. And this is where a lot of people are trained to invest in 401ks. That's their version of investing in the stock market because it comes out pre-tax, they don't have to look at it, and just keeps getting invested, compound interest, and grows, and they've accumulated this pile of money. But now we get to the distribution phase. The distribution phase is what separates the good from the great. In the distribution phase, this whole game is about how do we get as much income as possible, pay as little tax as possible, and make our money so we don't run out. And what that looks like is it's very similar to when people go hiking. They go up the mountain just fine. That's that accumulation phase. They took care of that. But now this distribution phase coming down the mountain, there's a lot of things you got to be prepared for so you don't run out of money. Because what happens is most people, if they're going to die while they're hiking, they're going to die on the way down. And the reason for that is simple. They already achieved the goal. The goal was to get up the mountain. The goal was to accumulate wealth. But they didn't also have, oh, I got to get back down. I gotta preserve my wealth. I gotta distribute it effectively. When you enter the distribution phase of your life, it's all about cash flow. Cash flow is the king in this phase of your life because that's what allows you to stop trying to accumulate more wealth. When you're distributing it, you want to distribute from sources that never run out. For example, if I have an apartment complex that has 64 units and it pays me monthly income, no matter if I have it for 10 months or 10 years, it's going to keep paying me monthly income. If I'm just taking money out of a 401k, I take that distribution. Every year, my account starts going down, 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 down. Eventually, I'm going to run out of money. The 401k is great for accumulation. It builds money, but then when you go to take money out, you have to pay a lot of taxes. The markets go up, markets come down. So markets are down like they are now, and you take money out, they can't recover. So they go down, your account goes down even faster, as opposed to supplementing that with non-correlated assets like real estate or life insurance, things that you can take your income from these other sources. You don't have to get all of the disadvantages of an accumulation vehicle while you're trying to succeed in the distribution phase. Another example of effectively winning the distribution phase game isn't just about one asset versus the other. And that's the ultimate key to how real wealth is built. It's how do I make all of these financial pieces in my financial game board work together for a common goal so I can successfully accumulate wealth, distribute the wealth, and then preserve it long-term for generations. This example is overlooked by a lot of people, but very wealthy people use this example all the time. What wealthy people do during the accumulation phase to plan for the distribution phase is they're putting money into those assets like real estate or into the stock market. And they're also putting money into assets that are uncorrelated to either one. Most of the time it's into life insurance, cash value life insurance specifically. So when they get to retirement, they have their stock market account that they've invested, they're getting those good rates of return. And when the market is up, they can take income from that. When the market goes down, they pull the money from their life insurance and they put it into their account, so then their stock market account recovers much quicker. I could go on in detail about this, and I probably will in another video, but for now, let's just keep going through the different phases. We saved the best for last. The best for last is the preservation phase. Okay, all of us are trying to build a legacy. We're trying to help our future generations have a better chance or start off better than what we had. And if that's the goal, then you need to take a look at the preservation phase before you're 95 years old and on your deathbed. If you perform the accumulation phase and the distribution phase of money correctly, you're going to get to that late 90s part of your life and have a lot of money. That's what I want for you, is to be multi-millionaire, even a billionaire. I want you to have a lot of money with streams of income coming in, tax protection, all that stuff set up. But I want you to then also be able to take advantage of not having to give away all that you earned to our very trustworthy government. When you build all this wealth, what happens is now you're going to have to pay a huge estate tax, or you're going to have to tie up all your money into a trust. And if you don't want to do either one of those, then there are several other solutions that you can do. The two things I would really stress when you're looking at your preservation phase is your mitigation of taxes and your maximization of control from beyond the grave. What you're going to want to do is you're going to want to make sure that you have enough permanent life insurance to cover any liquidation expenses, legal fees, any of those type of expenses that your beneficiaries would have to incur. You want to make sure that your life insurance amount covers all of that. At death, we want to have a 1-to-1 ratio of life insurance to assets. The second thing you want to have is all of those assets go into a specific type of trust. And that trust is dependent on your situation. You want to meet with a good estate attorney to determine that. But that trust is going to give you control from beyond the grave. So you don't end up with an 18-year-old son who inherits $100 million. Homeboy's buying a Ferrari. Like, let's be real. What you can do is you can set parameters around how they get the money. So, hey, if you're going to go invest in this mentorship or mastermind, you can take the $50,000 to go do that. If you're going to go to college, you can take the money for that. You're going to get married, you have a child, you buy a home, all these things that are likely to be productive for their future, they get access to this money. So they get the help when they need it. When you have control over your money from beyond the grave using trust and life insurance to make sure your generational wealth continues long after you're gone, I'm gonna pass on a lot of money to my child, and I want them to only use that money and in a way that's gonna help them grow the family fortune so my grandkids and great-grandkids can continue to reap the benefits of all the work that I put in during my life. This is exactly what the Rockefellers do. They have their trust set up to where every time they get a new child into the family, that family then gets a life insurance policy to continue to replace all of the income that they withdraw from the trust. So for example, and like we said earlier, they're gonna take out money for college, money for investing, getting married, buying a house. That life insurance policy, they used money from the trust to buy when they were young. When they die, all the money they took out of the trust is gonna get covered from the death benefit of that life insurance policy, thus meaning their entire family wealth will never disappear. If you want to win the game of money for the accumulation phase, the distribution phase, and the preservation phase of money, you got to treat it as a game. You start off, everyone's equal. We're just all by ourselves trying to accumulate wealth and do whatever we got to do, put in that work, put in those hours to build this family fortune. Once we build that, then we want it to continue to grow, but also pay us while we're in this distribution phase. So we're going to distribute that money effectively, and then to preserve that wealth, all these distributions that we're getting all funnels back in to the same family fortune. All this is great information, but what do you do with it? How do you apply it to your life? The very next step that you can do, regardless of what stage you're on, put a question in the comments below. I'm going to answer every question that I can. And wherever you're at, just ask, hey, well, what's my next step? If you put where you are, I can help give you the next step of where you want to go and point you in the direction of how to optimize what's coming down the pipe.